was going through my old stuff and I found my, I guess, like notebook, or it's like a tray or a notepad. This is when I first started getting serious into trading and learning about investing. This is where I wrote everything. So I have like a bunch of pages here of stuff, so I thought we could look through it and see what I actually wrote, because I haven't visited this in a while, I guess. This, I'm trying to think, definitely 3 years, probably almost 4 years at this point, because it was in the summer. And then like maybe 5 months after that I started this YouTube channel. So yeah, I think almost 4 years ago. It doesn't seem that long. Maybe it was 3. I don't know. Anyway, 3 or 4 years, something like that. It doesn't really matter. So I first started off. I got PE over here. Yeah, we kind of know what the PE is, just share price over annual EPS. Or I guess depends on what kind of PE ratio you're looking at. Got the PP ratio, the price to book, share price, equity per share. I always thought the price to book was really important, and I guess, it depends what kind of investor or trader you are, but, I guess, yeah, real quick, I was writing all these technical terms down just because I wanted it in one place I could easily refer back to. So I never really used these in trading per se, but, like, if I wanted to buy a company to invest, or if I wanted to switch over from, actually, that's a great point. At this point in my trading career, I was like, do I want to trade off of fundamentals, like look at ratios and try to time it that way and find value, or would I rather do the chart? So I guess at that time I was doing both. I did have another book that went with this. It was the trades I actually made. I wrote down why, and yeah, basically that's it. Like the timing, the day, like why I selected that size too. I think I threw that out because I only did it for like a month, and then I kind of just, I don't know, not that I got bored, but I got like a lot just to write down everything, and I was like, am I really gonna ever refer back to that? Even this, I referred back to it a few times, but anyway, let's continue a little bit. Also, the camera's probably gonna be really buggy because it's a yellow pad, and this camera has a very bad white balance, but anyway. Got the PEG ratio, the PE ratio to the projected 5-year growth earnings. I think that's a pretty good ratio, but it depends on the economic environment, and this type of environment, I don't think that's a good ratio to actually 5-year growth earnings rate. I don't know, but below 1 usually means undervalued. Usually only see in a bear market. The lower the PEG, the better. Yeah, because if the P ratio is usually much larger than the earnings, then that usually means that people are not overvaluing, but are valuing a company more, as opposed to if the earnings are growing a lot faster and the ratio is a lot less. Then we get the ROE, the annual net income to shareholder equity. Got some percentages, about 17 to 20 is a decent. Anything above 25 ROE, annual net income to shareholder. How a company uses investments, yeah. Actually, annual net income to shareholder. Oh, my bad. 25 or better is great. I'm like, why is 25? Why would that number be worse? The higher it goes, but I was just misinterpreting that. Yeah, return on investment, you want that to be mad high, but anything above 25% means the company is very efficient with your money. Got the total debt to equity ratio, lower the better, avoid above 2, but so many companies are have massive amounts of debt, and it also depends on the industry too. I'm just thinking of airline stocks. They're usually more in debt because they gotta buy all the planes and they're mad money. efficient, but above 3 means they're holding back. They could be growing much better. Let's see what else we got. Swing trade indicators. We got RSI. Yeah, undervalued below 30 really. EMA. I forgot about EMA. I used to like live off of that indicator, and then I was like, I don't think I need this. But yeah, you have the EMA, you have the SMA. SMA, the simple moving average, I think is a pretty decent indicator to view like long-term trends of like a stock or market relative to where it's been. But EMA, I guess it could be good for trading. But yeah, just don't use them anymore. Don't need to. Volume's important. VWAP, good for like day trading. Yeah. Didn't write too much about that. What's down here? The MACD I used for a good amount, and then I just never made money off of it, so I'm like, I'm getting out of this. MACD, it looks great after the fact, but when you're actually in the trade, it's hard to use, in my opinion. Like, I only invest in what you see value in, never invest in other people's opinions, or invest in what you don't understand. Have a plan, avoid hype, upward, horizontal trend, profit, percent margin profit. Check for earnings. Basically just a checklist, like, does a stock that I'm trading have all these values? Like, if I was investing in a stock because someone else said something, I'd be like, no, I'm not going to do that just because it's against my rules. These are my rules, I guess. Check for earnings, always do that, because I didn't do that one time, I got crushed. Margin for sell-off, profit. At the time, it was $6 to buy, $6 to sell. Man, that was rough. Lost so much money just in the commission. Because I wasn't trading with like a lot of time. I mean, maybe even now I'm not really relative to other people, but over here we have, I guess, just tickers. Dropbox, Apple, Fun, is that Funko? CGC, I don't even know a lot of these. Alright. My need list to buy. Oh, so this is like when I first started trading, I was like, let me make a, like, I guess again, this is a checklist of rules. This is a checklist of, if I followed the rules, this is the criteria that the stock had. RSI below 35, candle line above EMA, positive slope. Yes, SMA line is appropriate for stock. Horizontal or ascending pattern. So I tried to make a checklist. I mean, over time I got more lenient with it, and I kind of noticed like, oh, this is gonna go higher or not. I don't really follow that anymore, but I think it was kind of good in the beginning to have some rules. And I was gonna sell if the pattern broke. RSI is above 60. EMA starts to flatten, approach SMA line. Like, in my opinion, this sell list is, yeah, it's good theoretically, but like in reality, like almost like probably the next day, like one of these was gonna break or something was gonna happen. So I think just especially in this market, being more flexible and open to volatility and changes is important. But you gotta, at least for me, I can't say for anybody else, but I'm more like lenient and relaxed when it comes to how things play out. And I guess I just don't put on that much risk anyway. So if something does happen, I'm chilling. Like, I'm not like losing too much money. Oh, the pattern day trading rule, yeah. Never really did more than 3 or 2 trades a day. But I just want to be aware of it. So the plan, 5-to-1 ratio, profit loss. Identify buy points, sell points, stop loss for safety, plan trades ahead, understand risk involved in each trade. 5-to-1 ratio. Yeah, I think it's good, but again, like the 5-to-1 ratio when you're gonna trade it in like practice, but you know, obviously when you go to actually do it, you gotta take into account that it's probably more like 5-to-2, let's say, I don't know, or like 4-to-1, let's just say, even though you're calculating the 5-to-1, gotta anticipate that it's a lot less just because of slippage. Lock in profit to keep small loss, so we set a stop loss immediately. No emotions. Use limit orders, yes. Alerts. Margin account. Need 4 times amount. Cash account need 4 times amount of money. What does that even mean? Level 2. Subscribe. I never end up using level 2. Actually, I guess I do a little bit, but it's not too important. Use stock scanners. Some moment, yeah. Or so I never really scanned. I just always built my own watch lists and scanned manually. It's my preferred method. I've always have. Basically, I tried scanning like once, or not once, but maybe for like a month, and I was like, yeah, this is dumb. Market pullback every morning, wait for a break. Market pulls back every morning, wait for break and resistance. Why did I put this? Realistic trends, day trading, 5-day frequency. I don't know why I put that, but maybe during the time that happened, like every morning, I was just taking note of it. Realistic trends, day trading, 5-day frequency, 24 to 72 hours. Swing trading at 20 plus days. 3 to 6 month analysis, how long it would take to reach expected price. That's why I like, sorry, talking a little fast. That's why I like the swing trade, just because I can use bigger time frames and analyze it a little more. But day trading, you gotta get those smaller time frames. Don't back, hold on stock, no emotions, opportunity cost, identify margin or profit, stick to it, don't get greedy. Use PP check, what is that? Inverse. This is looking at a bunch of like accelerated ETFs at the time too. Momentum trading. I never did good in momentum trading. I prefer continuation patterns. First, stock split. Just write down more information. Number 2, look into overall evaluation of company. Find solutions for your mistakes. Find go-to stocks. Sorry, my handwriting's really bad. I'm kind of just scribbling this too because I kind of figured I would be the only person to look at it. Every stock is performing how you expect. Look for profits. Can every stock reads differently? Swing trade checklist. Let's see if I still follow this to the day. Short term, 1 to 3 days. Time. 180 days, 4-hour candles. Using the EMA 15, SMA 180 MACD. Man, I was using I can't believe I was using the 180. Yeah, I did that because I wanted like the pre-market data and stuff, but I hate how it looks. It's so hard to read. Ascending horizontal pattern, getting good deal, oversold. Margin profit greater than 3%. That's got to be greater than 3%, I think, because at the time, like, just to cover like costs and stuff. Candles actively trading above EMA. EMA pushing up. Intraday candles trending between mid. Man, there's a lot of indicators on that trade. Or that checklist. Oh, my swing trade scanner in Discord announcements. 15. So I was scanning 15 to 30 bucks. Volume at least. It depends on the aftermarket before, but at least like 100,000 to a million. Actually, that's 10,000. I guess that's pre-market, yeah. Yeah, RSI, blah, blah, blah. ETFs has more predictable patterns. Swing trading, they're a little bit more predictable just because they are used in the overall market as opposed to individual stocks. So if you got the vibe of the, like, say retail market, you can, trade that as opposed to trading one company. Important for trade to validate 100% and support patience. Trading ETFs. Focus on horizontal patterns. Trends tend to decay over time. Future. Yeah, I kind of stopped doing all the ETF stuff. I just do stocks, but it's everyone's opinion how they do it. Oh, this is my boy. is where I got most of my like psychological learning from. Like, how do I manage my emotions? Trading is like a game, like a sniper. Yeah, he's known as the market sniper. It's like an analogy. You don't have to take like one shot like whenever you want. I mean, you could always pick the winning shots. The trades. You don't need to take all these trades every day. You can just be patient and wait for the one that fits all your criteria. Trade with a pattern, continuation, people's emotions based on price of stock. React to people's human reactions to patterns. What is this? I is this destructive aspect of trading ego equals destructive, yeah. After loss or after low volatility sometimes creates high volatility. This is so if there's any like indicator, I don't need some line to tell me like something about volatility. I can look at the volume and be like, I guess volume is a line technically. But if volatility is funneling, channeling, and like price action too, or sorry, if the volatility is like funneling like price action wise, eventually something's got to happen, and that will create a higher volatility pattern after some time period after that. Usually, right? That's what I like to look for. Volumes can read a false breakout, yeah. Indicator C, volume, Dow theory, higher highs, lower lows. Reading candles important, yep. Information for Nielsen's book. Yeah, I've read Nielsen's book. That's where I heard about it. Trading in trending markets with normal convictions, continuation patterns. Greed keeps you in, pain gets you out. Yep. Always have a plan. High low volatility, a point of entry. After a period of high volatility is in anticipation of higher volatility. I don't know if I get that, but stop loss, yup, risk reward, strength of trend, impulse of candles, degree of pullback, angle of ascend. All big word and just not interesting words. Manage a good process. Don't have a percentage or money goal. Yeah, it's so critical, like especially in the beginning, like just because even if you trade, like I had some winning trades, so that's cool, like what I do there, but it's like just because you had a winning trade doesn't mean that the process was good and repeatable. So, process, focus on the process, becoming a better trader as opposed to specifically a percentage or money goal. Everyone knows the simple support resistance, rush of orders. Yeah, literally everybody knows the simple support and resistance. Rush of orders at key round numbers. Just trading at the technical levels. Let's see, calm mental assessment. I can't see because my tripod's in the way. Calm mental assessment game meant to create a higher level of mindfulness. Higher fluent biology, breathing helps walk around. Yeah, just, don't be sitting there all day, getting all, like, in your head, do some push-ups or something. You can't control market, but you can control your response to the market. Deep stuff. Fibonacci. I was gonna write about Fibonacci stuff here. If I had to say, like, a specific indicator, like, again, I think standard deviation indicator is great. And then I'd say Fibonacci just because, again, it has to do with especially now that a lot more people are using, I guess, people and robots, but, like, technical trading, you really get that, like, natural phenomenon of numbers in I guess, on the chart, so, I don't know, you just see Fibonacci in a lot of different things in nature, so why would the stock market, which a lot of humans, and I guess even robots who design the humans, trade off of, so it's kind of similar. The triple top pattern, 3 to 6 months, that's kind of irrelevant, this can happen whenever. Yeah, I just wrote it out. I don't really agree with it because it's very hard to predict until you're in the moment. Like, that could be a double top, could be triple top, you don't really know. Head and shoulder, I've seen this though a lot, so you should have high volume into the move, low volume, I guess around here. Enough volume here to confirm a sell-off. The ascending triangle, this is still one of my favorites. Breakers, check for sells off, it's like, oh, okay, whatever. Or recatches, but at the breakout, yeah, it might be good too, but I've never gotten in at the breakout. It's not, I don't know, it's not something I do. It's double top. Yeah, I'm just writing down patterns. These are all just really basic patterns usually you learn in the beginning, but I didn't really ever find these too useful. I mean, they're good to keep in mind because other people are probably trading off of them. I didn't really see them to be super important. Fibonacci retracements to predict how they pull back in a human natural level. Yeah, the 61.8%, but that could be a Fibonacci retracement, but isn't that also one standard deviation? Or, I'm trying to think, now that I think about it, I think it's one standard deviation technically. Or is it 66.8? It's one of those numbers. I don't know, but it's about 60, somewhere between 60 and 70% is a one standard deviation, and also it's a type of Fibonacci retracement, so I think those are good indicators, but that's really it. Oh, taxes, yeah, dividend taxes at 0, 15, 20% with income. If you hold it for 1 year, you get decreased taxes for during long-term capital gains, short-term, anything less than that. Tax on net gains. The 429 rule. Trader. What? I think that's if you're like a business traders that, I don't know, the wash sale rule, yeah. Loss on stock could be deducted from taxes, but if you get back info if you get back into it, the stock within 30 days, you can't do it, yeah, so I always make sure whenever I sell something and I loot for a loss, I just wait 30 days. 1, 2, 5, 6 contract rule. What is that? I don't know what that is. Anyway, let's see what else. What is this? Uptrend, same height, consolidation. What is this? Fit retracement back down of absolute high. Long-term focus, don't trend in one direction, looking for market to go quiet. Drumstick candles. What is this? This looks like an ascending triangle pattern, but I don't really understand what I did here. Sell, enter, sell. Looking for loss of momentum. I'm not really sure what this is. Gap usually gets filled after days. Gap usually can't connect to support. Alright, next page. Got the candlesticks, pretty basic stuff, but open, close, green, kind of bullish. To get the wicks. I kind of just wanted to have it like on a sheet of paper that I could just easily refer back to. But I never really needed to do that. Let's see what we got here. Friday. This is actually a trading day. I don't know what day this was, but did I really trade? No, this was in the morning, so I was looking for like an $800 position. Is that right? Or is it 8? No, yeah. Profit 30 shares, 10% profit, 2% risk, 26. Get up for August 7th. I guess I took that trade. I don't even know. 7 to 8 shares breaks. Oh, these are all my like if scenarios. I think if it breaks 145% reward. I don't know. Just a bunch of really like I didn't really know what I was doing at this time. I guess maybe I did. But I was just writing down my thoughts about trading right before the market opened, I guess. Oh, we're getting goals. Let's see. My goals have definitely changed since then, but it's okay. Let's see. Short-term 1 to 2 years grow Instagram page providing value with stock charts. See, like, now talk about many great videos on YouTube. I've started out myself and others learn. Continue making Pokemon. is that? Unbushing. What the heck? Oh. Pokemon unboxing videos, reselling cards to fuel videos. At the time I was making some good money selling Pokemon and Magic cards. Graduate college with above 3.0. That I did. Cool. I actually did do the chart stuff. That was pretty fun, and I think it's got like over 100 followers. But I initially wanted to create videos just because it's fun. I like to make videos, but like I figured if I don't need to write down in a journal like all my stuff, like trades. I can just make a video, and if I ever want to refer back to it, I can do that. So I thought that'd be a good idea. And then eventually here we are today talking or whispering ASMR, so it's kind of cool. But yeah, you kind of see. So this was my goal. I wish I wrote the date down, but it's probably 3 or 4 years ago. But yeah, long term, own a home to rent to college students, convert YouTube and Insta followers to subscription-based company, provide alerts and stuff. Yeah, YouTube live streams monthly, but like, I don't know, maybe this is like super long term, but definitely not thinking about that right now. Renting a home to college students, I think, is a good goal. Just because if you get in the right location, it's great. Convert the reason why I would pull people off of like YouTube and stuff is just because you get a smaller knit community you can interact with. But I have no problems with YouTube right now, so no reason to do that. Provide alerts and stock. I was assuming like long term I would become more knowledgeable to where my knowledge, I guess, would be worthy to others for payment, but I don't really think that right now, and I don't want to be like one of those other people that just dish out stock information just to make some little bit more money. Like, I don't know, it's kind of slimy to me. I get that there's some people out there that do a great job. Like, I know some people, not personally, but like on YouTube who are really smart and their information is actually valuable. But I think 90% of the people on YouTube are pretty trash. Like, at least stock trading advice, So I don't want to become like one of them, the bad people. I'd rather just stick to my own lane. And that's making relaxing stock videos. See where it goes. Instagram I kind of just dropped because YouTube's a better platform, and the time I was putting on Instagram wasn't really worth it. I'll just stick to one platform. What is this? Earnings, revenue, just indicators, I guess. Quality trades average 1 million a day. Quality company about 50 uptrending SMA. 50 SMA, just a bunch of SMA, like, doesn't matter, like, not too close to earning, it's important. Price action makes sense, yeah, don't enter trade on Friday. I sometimes broke that rule, but to me there's no reason to buy a trade on Friday. Because over the weekend you got Saturday, Sunday, anything can happen, Got balance sheets, net receivables, money, current assets, just a bunch of like what each thing on the balance sheet means. This is actually a pretty important page. You want total cash assets to be increasing each year. Liabilities can increase as well if assets are increasing faster. Yeah, perfect. If assets are increasing, liabilities are decreasing over time. Need stock or equity to always be increasing annually. You don't need it, but I like to look at stockholder equity because that's basically your assets are increasing, liabilities decreasing. Kind of, in a way, assets are always going to be increasing, liabilities could be chilling, or at least assets are increasing faster than liabilities. That's what I meant to say. Working capital longer than long-term debt. Yep. Income statement, gross profit margin, operating income. It's again top line, total revenue, bottom line, net income. What we want: operating income positive, net income positive, both increasing over time. This is like what I want, actually, not what we like, not what everybody wants, but this is what I look for, I guess. Net income positive, both increasing over time. Bad if revenue increases and operating income decreases. Yeah, that's because they're making more money, but they're not actually being able to use that money, basically. Operating expense expenses decrease. Good. Yep, you want them to minimize the cost of owning or operating the business. EPS annual growth 4 to 7% decent. Yeah, it's not bad. 4 to 7%. Cash flow statement. Let's see. Yeah, you got activities like the business activities, investments. Yeah. Net change in cash. Free cash flow operating minus the capital expenditures. Accounts receivable. I mean, again, all this stuff is like online, but this is just kind of what I wrote down, what I thought was important. Analyze businesses and stuff. I mean, I don't really analyze a lot of businesses now, but I'm just saying, like, when I did have a little bit more time into it, my hand's cramping. I'll try to hold it this hand now. Accounts receivable. Yeah, whatever. Not too important. Cash flow from operating activities. What we want is we want company to be we want company to be investing in their own company, not other companies. Like, just a quick example. So I think Disney bought, like, let's say like $1 billion of DraftKings. Like, is that super important? I don't know, but rather than invest $1 billion back into their own company, that happened maybe like a few months or a year ago. I don't know. We want increasing operating income. What is that? Acquisitions higher than investing in own company might be bad. Yeah. You gotta see like where they're actually buying their stuff, or basically cash flow. Where's their money moving to? We want it going back into the business, back to shareholders, as opposed to elsewhere. How much now debt? How much now debt are they taking on? How much debt are they taking on? I don't know why I put that word. Stock compensation with negative income. Yeah, you really don't want to see their company like giving out a lot of stock to like their employees and stuff, or just in general, like dividends or buybacks if they're not making any money. Gotta make the business profitable. Is that really it? I guess that is it. I mean, yeah, this is just what I put together when I first started trading and stuff, so it's not like a complete book or anything, but I don't like writing it anymore just because it's, I don't know, I don't feel I need to. Kind of cool though to go back and just see like what I wrote, and I don't know, I guess how I changed today, because sorry, I gotta stretch. I feel like my strategy definitely changed. I mean, I feel like most people's change over time. So, yeah, I guess now, just more technicals. But now I'm kind of slowly getting into more just dividend long-term companies that I think are kind of at a value, but, got a lot of cash right now. I'm waiting just for the market not to be so expensive. I'm not saying it's gonna pull back. I'm just saying it's expensive, so I don't want to invest in something when it's super expensive. So just taking a chill pill and trading a little bit in and out. But yeah, I think it's kind of cool. See what I wrote and see what happened a few years later. It doesn't feel that long though. It feels like I've only been learning about the market for a few months, but there's definitely a lot to know, but it's not like you need to know everything or even a lot of things to make decent money, or not to make decent money, but to participate, because again, the biggest thing about learning this is not, oh, do you know what this ratio means, whatever. It's like understanding your own emotions and understanding, do you know what you're buying, and can you hang on and, see it through, and managing those emotions. There's definitely an element of knowledge you gotta know, but definitely not all of this. I don't really use any of the trading stuff or technical trading indicators anymore. Just, I don't see a point. Just look at the candles and say, oh, here looks pretty spicy because of some volatility, Just gotta find out what works for you, but the only way you're gonna know how to do that is to just do a bunch of stuff all at once and see what fits your trend. It's definitely easier said than done, but I mean, I did it, so if I can do it, I think most people can do it too. Just you gotta dedicate some time and just see the plan through. So appreciate everybody for watching. I like to step away from the computer every now and then to make a video, just something different, on something different. But yeah, I'll see if we could do something like this